Now we're going to have a look at a real life example trade which I very recently took. So let's have a look at the screen. Now, based on everything that you've learned throughout this course, you should quickly be able to identify that this is a key horizontal level, which should act as support because you have your pivot levels over here. 1, 2, price comes down, rejects again the third time, breaks through on the fourth time, holds it as support and moves up. You're now coming into this level for what? The very first time. We know the first time that price action comes into a key level has a high probability of bouncing. So next would be to mark off where your horizontal level of resistance would come. I'll leave that up to you and then we'll get into the trade idea. So I've highlighted the zone of interest. I wrote here, your expectation is that price will bounce from here. So you'd be looking to take a long back up towards where the range highs are. So keep in mind that this is your highlighted area where you expect price to come into. So this is how I would essentially plan out that trade, right? You have your range highs, you expect price is going to move back towards the top side over there. And we have liquidity, resting liquidity. We know that market makers tend to target that liquidity. Now, you always begin with where does the idea fail? Where are you completely wrong on this idea? And I've marked off it's going to be this level here. Why this level? Well, if we go back, you would see that means that you're completely breaking back below this key support zone. And this is the origin area or the order block that led to that initial impulsive move towards the upside, which means if you get back underneath that level, even with a wick basis, your idea is wrong. And that's why my stop is placed over there at $23,798 for Bitcoin. So again, the intended plan is that this prior resistance is now going to flip into support. So let's look at price over here. Now, there's a couple of things that need to take place. I said here, the aim is now to split your orders up into 5 parts, exactly like I showed you using the infographic. Number 1, enter slightly before the main support. That protects you against front running. Number 2, enter exactly at that support level. Number 3, enter below the support in case market makers are targeting those players' stops, because that's the obvious level, right? The SR flip level, the strong horizontal is the obvious level that even retail traders would be placing their stops just below. And then number 4 and 5, you can enter a tick above where you would be stopped out. So the trade idea would look something like that. Now, as much as this is a science, there is also an art involved. Over time, you'll start to get an understanding for how to trade whichever is your particular favorite asset class. In my case, it's Bitcoin, and you'll get an understanding for how Bitcoin moves, and you'll start to learn where to place your stops. So this is how I've spread my orders. You can see over here, first order at the liquidity, second order is just below that SR flip, at the support zone. I expect that price will probably push through ever so slightly. You can see our gray highlighted box over here, which we started off with. And then order 3, remember order 3 is going to be below where the stop losses are most likely placed. Market makers target those levels. And then our worst case scenario is that price comes all the way down here, might hit 4 and 5, but this is really insurance. This number 4 and 5 is insurance. We don't actually plan for this level to be hit. It's just in case. Okay, here's price action. We watch it starting to play out, and their price action came through the level 1, 2, 3. We got 3 orders filled, and price has started to move, supporting the thesis that market makers were targeting the stop losses. This happens a high probability of the time. You learned about it where we covered the order block levels and the liquidation levels using high block capital. You remember that you want to line this up with your trade ideas to try look for those entries and exits. And their price continues towards the upside. You can see hitting into the range highs. The trade was successful. So if we have a look at the hourly chart over here, we can get a little bit more granular on exactly what took place. You can see price came into the level. It wicked all the way through, almost got into the SR zone, which is where most retail traders would have their entries. But sometimes price might just aggressively start to run from this level. This is why you have that first early order in place, so that you still have a trade on the table which is moving in your intended direction. This helps control those strong emotions, right? FOMO, fear of missing out. What typically happens, and traders mess up often, if their order was set below where our second order is, price came down to the first order, bounced, and just started to move up aggressively. those market participants have extreme FOMO. What happens is then they start to chase price towards the upside and make very, very bad mistakes, taking on too much risk and often losing a whole lot of money. This is why we have this 5-point entry approach. It helps with both the FOMO as well as the fear. How does it help on the fear side? Well, what happened over here, if you had hit your entire order in on the first order zone over here and price did this and went down and went down again, where would your emotions be? You'd be absolutely panicking. But now this approach is protecting you against those fearful feelings because you know, well, you still have another order to be filled, right? That order got filled, so you feel happy. The next order gets filled, you feel again content. And ultimately, you know, you still have 2 more in place in the event that price comes even further. So it's really giving you full emotional control, which is exactly what you need when it comes to trading. Now, price moved into that level. You can mark it off on a low time frame chart. The break of support over here, once that break of support took place, you know price is going to start to move towards the upside. A very quick side note. Some of you may be wondering, how do you split your equity up into these 5 orders? Well, it's very simple. At the end of the day, you have to calculate how much you can risk on each particular trade. The general rule of thumb is that you're going to risk anywhere between 1% and, if you're aggressive, 3%. So let's work on the basis of 1%. Let's assume that 1% loss on your account is $1,000. That means that you divide that $1,000 up into 5 different orders. So 1,000 divided by 5 equals $200. That means you can enter $200 onto order 1, 200 onto order 2, 200 onto order 3, 200 onto order 4, and then finally the last $200 of course goes to order 5. So if price moves through all of those orders and then hits your stop loss, you're going to lose $1,000, which is part of your calculated risk. Now, once this break of support takes place, you really have one more option. You can use it if you want, you don't have to, but if you want to, you could technically pull order 4 and 5 off of the books using that equity. You can enter it over here. Because price is now moving in your favor, you have a break of structure. This is showing you that price is moving in the direction that you've intended, and it's most likely going to continue. So if you want full exposure, remove order 4 and 5. Once you see a low time frame break of structure, re-enter on the next higher low, and ultimately, boom, there goes the trade, and it gets fulfilled all the way to our final take profit. All right, guys, so now that we've covered the 5-point entry approach, use it as much as you can. Make sure that you go out there and practice. It has been magic for my trading career. It absolutely revolutionized everything for me when I started to use this. It reduced my losses by an enormous amount and increase the probability of success as well. So it really, really changed things for me, and I'm sure it will do the same thing for you. Make sure that you practice it. If you're struggling with it at first, don't worry. It happened to me too. Over time, you'll start to perfect it. It really comes down to practice. Now, in the next video, I'm going to wrap everything up with my final thoughts before you embark on this very successful journey of trading, which I'm sure most of you are about to go on. So I'll see you guys on the next video. Cheers for now.